Everyone's freaking out about inflation. Inflation's going up globally and locally, and therefore they're thinking house prices are going to crash. Inflation seems like a bad thing, means everyone should just keep their money in their mattresses. House prices are going to come down. Is this true? I'm going to talk about in this video something that most people, 99% of people, should know, could know, but they don't know. And so therefore, they don't actually build wealth in these inflationary environments. If you're interested, keep watching. My name's PK. I help people build passive income, wealth through the Property Investment Accelerator mentorship program using data, exactly like I'm going to teach you right now, without needing a $15,000 buyer's agent every single time. And if you're interested in either property investing, Australian global economy, or financial happiness, those are the three things we cover in this channel. Hit the subscribe button and give this video a thumbs up, a like. I would super appreciate it. Let's get into it. So I think the first thing I'm going to say, and I'm going to share with you a chart real soon, is that people intrinsically think that inflation rising, hyperinflation, call it whatever you like, is a bad thing for the economy. Now, it's not a great thing, I'll be honest, but the way that it impacts property prices is different to the way it impacts the economy. The way it impacts the economy is detrimental. People's purchasing power reduces. However, the way it impacts property prices is inflationary. It's positive because property is a good, right? It's not a service, it's an asset. It also rises in value in times of inflation. Now, in the last video, I proved to you how in the last 32 years, every time there's been interest rate rises, counterintuitively, property prices have risen. Okay, if you don't believe me, think that's just BS, go back and watch that video. I'll leave a link to it as well. But they do. And also, every time inflation rises in Australia, Australian property prices increase. Okay, and just think about it logically. You know, like right now, it's really hard to get tradespeople, building prices, steel, timber, everything's going up. So it makes sense for established properties to be worth more. Okay, that sort of just logically makes sense, right? But let me just share with you a chart right now and show you the history of inflation and property prices in Australia. Here it is right here. So in the black line, you have annual house price movements. Okay, so anything above zero is positive growth. Anything below zero is obviously declines or negative growth. And the red line is the annual inflation rate. So let's just, go straight to the points in which inflation has been huge. I mean, we're kind of at 3% right now, between 2 and 4% is being where we have been in the last year. We're now approaching around 3%. We're actually not even there yet on an underlying basis. So, when I'm going to talk about huge inflationary periods like close to 20% here, take that with a grain of salt. We're not there, nor are we going to get there, because back in these times, they didn't have monetary policy the way that they do now. Okay, so back here, post-war, everything was hunky-dory. Everyone was really happy mood. Baby boom is when exactly this happened. Huge inflation. You see, property prices, they went up. They were coming off such a huge rise. Inflation was steadily rising, right? From 45 onwards, which is when the war ended, Second World War, this red line was increasing, and we would never get this in this day and age, up to 20% inflation in Australia. Like that's, Zimbabwe levels. But you can see what property prices did. Okay, they went all the way up to 40%. Okay, and don't mistake this black line coming down as a crash. Anything above zero is still positive growth. And then you had, I think the most comparable example to what we're facing right now in the world is in the early 70s, you had a supply shock. Okay, limited amount of oil being able to be distributed, produced around the world. It was a supply side shock. It wasn't due to huge demand. It was because all of a sudden there was less oil available for sale. It's what we called a supply side price shock. And that price shock is what increased the price of goods and services. That's what increased this red line, from 69 all the way up in let's call it 1973, 1974, all the way up to about 18, 19%, touching 20% right here. This period was because of the oil shock. And that's exactly what we're experiencing now. Probably not to this extent, but it's a really good example of what's driving inflationary pressures, supply chain bottlenecks, and oil prices increasing, not because demand is through the roof, it's because supply has been cut off due to supply chain shortages and breakages. And you can see in this exact period from 69 to about 73, house prices were continuously increasing. Okay, so back here they were increasing about 4 or 5%. At the height, they were increasing about 25%. Okay, and it's not like they had an increase for decades. I mean, just before that, they increased 20% the year or two before. Okay, so, and then you might say, well, there's a huge increase and then they must have crashed, right, PK? This is a really bad time to buy, right, PK? Well, check it out. Inflation was under control. It came down, and property prices, whilst they didn't increase as much as they did before, even in 77, they were still going up by 4 or 5%. In fact, in the next decade or 2 decades, or you could say all the way till now in 2022, they never really decreased at all. I mean, you've got little nudges of negative growth here and here, but never really decreased. And so how does that compare? How does that be meaningful to where we are right now in the property cycle? Well, inflation is going up. We're kind of like here. This red line is going to continue to go up in the next 2-3 years with the Ukraine-Russia crisis, with whatever happens with China, with, let's call it COVID wave 3, 4, 5, whatever. If that happens, fingers crossed it doesn't. Supply chain bottlenecks, all this stuff is going to happen, right? And therefore, inflation will cause house prices to further increase, regardless of the house price cycle. Now, I'm not saying that Sydney, Melbourne, anywhere blindfold on, you can pick a property, it will go up. No, there's always markets within markets. And in fact, my opinion, my thought based on data, I've done other videos on this, is that Sydney, Melbourne, really bad time to be buying. But other parts of Australia, regional, Queensland, WA, SA, other places, really good time to be buying. So, you might be thinking, well, this doesn't show the full story, PK, because interest rates, what do they do in this time period? I can say they also went up. And in the last video, I explained over the last 32 years how every time interest rates go up, so do house prices. In this video, I've just proved to you, looking at data, that when inflation goes up, house prices go up as well. Now, house prices have come down as well, but that's not because of inflationary pressures. I mean, right here, there was a huge crash in house prices. In fact, there have only been 2 or 3 crashes in Australia, and they've all been before 1970, and none of them were because of inflation. You can see inflation is very low here, and very low here. Okay, this one was because of the depression, so there was deflation. So hopefully that kind of resonates. If you or your friend circle, I have so many people coming to me and saying, look, I really don't want to invest in my first property or second or third, fourth property, but my colleague, my friends, the people I hang out with, I trust, they're all saying that interest rates are rising, inflation is rising, put your property investing on hold. Look, ignore your friends. I probably a little bit, abrupt and audacious of me to say this, but seriously, like, if you want to create wealth, ignore your friends right now, ignore your colleagues right now, ignore even me right now, just forget about me. Look at the data and make up your own mind. Okay, if you want to level up, really take it to the next level, suburb by suburb, property by property, make some passive income, then level up your education, join the 13,000 member Facebook group below, leave link below, and also join my podcast or listen to my podcast. It's free. You gotta put that education in your mind to be able to get out of the rat race. Education equals freedom. It's as simple as that. You can't outsource your finances. No one cares about them as much as you do. And if you really want to care about them, I'll leave link below as well to the Property Investment Accelerator. That was a cheeky little plug. But guys, hit the subscribe button. This is just raw. I don't think anyone else is saying this stuff. And by the way, before I forget, this chart was from John Lindemann. So big credit to him. Amazing analysis. I didn't do this, but I'm just leveraging the amazing work he's already done. Guys, hit the subscribe button. Give it a thumbs up. Thank you so much. Bye.